recording. So, first of all, we create a bank account to receive and pay money from. We create Metro Bank, and this one is by default it should be checking accounts. If you are using a foreign currency inside this bank, it means not you buy foreign currency, means you have foreign currency inside this account. So you must tell the system this bank is using what currency. So you need to tell this system, alright? So you have Metro Bank now. Now, what about your petty cash? Okay, so your petty cash, you can put whatever account number, and we put petty cash number whatever, and this one should be cash on hand account, because this is cash that you have in hand. So that is going to be like that. So you can create as many banks as you want. So just like that. So now I can see that you already set up all these departments and all of that. So first, already set up all these things, and they are in their respective groups. This is all fine. So now we go to chart of accounts. This has not been touched yet. I have just created those things that you wanted me to put inside for this marketing allowance. And what is this representation? I'm not sure, but okay, the supplies and brokerage fees, that is all that I just added in. So this is going to be your chart of accounts. Everything is going to be based on this chart of accounts for any transaction, so that when you make a transaction, you know which account does it go to. If you need to create an account, this is where you will go. So, any questions so far?
But the initial or the default chart of accounts,
Yeah.
they the same names but with different on the parentheses. Did you remove that, or can you explain us for what is the difference between that?
What is the difference between?
Uh, because I saw the default chart of accounts, there are the same
Yeah.
but with
Oh,
different.
you mean they are manufacturing chart of accounts, there is services chart of
Yes,
accounts, right? Yeah.
yes.
That one, it depends on you. It's the same. It's just that you may not be using the manufacturing, so you can just delete all of that, which I already have done already. You do
Okay,
not
okay.
see that manufacturing chart of accounts or anything. If you are not using any accounts, you can just delete it, no problem. All right, so right now I can see that you probably need one more account here. What do you think that is? That is probably going to be your bank charges account. Do you have a bank
Uh,
charges account here?
I I did
No,
not add that.
you do not have bank charges, but you do pay bank charges, right?
Yes, yes,
Yeah,
we.
so you need to create the account. So bank charges is what? Is it an asset? Is it a liability? Is it an expense? Is it a revenue? It must be expense account. So how do you create an expense account? you need to go to wherever that you need to set it up. You have this little button here called add, right? So if you need to add anything in the middle here, you just need to click this little add. Let's say you need to add another payables or add another current liabilities and everything, because this accounts is going to be displayed inside your balance sheet and income statement. So for example, selling and administrative expenses, this is probably what you are going to be using, selling and administrative expense. So how do you create an account? You just need to click this little add button here and create an account. But I'm going to do the lazy way, which is like this. I go to this, wherever this thing is, just click there, and then I go to here, and then I copy, and then it becomes clean. So let's say I want to create a bank charges account. So I can just follow through from here, 8497, and then I create a bank charges account. Alright, so now this bank charges account is an expense account. So expense account need to have debit balance or credit balance. It must be debit balance, right? So this is where you have this debit and credit here. This is referring to whether it is a debit balance account or credit balance account. What is the account category? Is it income statement? Of course, right? Because bank charges is expense, it must belong to income statement. So this is a sub account or parent account. This must be sub account, and you need to tell the system what is the parent account if it is a sub account. If you put here parent account, then what is the parent account of this parent account? For example, this is selling administrative. If I were to create this bank charges account, this selling and administrative expenses belong to which one? It belongs to this. It belongs to net income, because this is going to calculate your net income in the income statement. Alright, so sub account. So now, how is this bank charges is going to be displayed inside your financial statement? Alright, so now what would it be displayed as? You have display method 1 and display method 2. So you can choose later, if display method 1 does not work or anything, you can choose display method 2. Later I will show you inside the balance sheet later, it's going to come up. So now, what is this display order here? Means that this one in the order of the income statement, which one does it show first? Is it the bank charges first? If I were to put this as 84950 or 84961, so it's going to come after this one. I will show you this in the income statement later. So now, if it is a payables account, you need to put it as payables. Then only you can create a new payables later. Inside here, you are going to create a payables. When you want to create this new payable here, this account must be registered as a payable account. If not, you cannot do a new payable because it's not a payable account. So now let's save this. So now, do we have a bank charges account? Yes, we do. Okay, so bank charges is a debit balance account and it belongs inside the income statement. Alright. So now, here it comes. So inventory and accounting is only linked inside the system. It is only linked by two modules: sales and purchases. Anything else, it is not linked to the accounting. It is only linked to sales and purchase only. Alright. So now you got all kinds of situation. You got some customer pay you 100%, some pay you 50%, some pay you by whatever method, and another 50% after, and then 20% after, and whatever it is. So now, how do we deal with this? Right? So this thing all is receivables, right?
Yes.
All right. So this is all receivables. So now, whether it is post-dated check, whether it's TT, whether it's LC, or whatever it is, receiving money is receiving money, whatever the method is, right? So now, how do we deal with this? Another question: how do we deal with foreign currency? All right. So now, let's take an example from your customer here. So your ADP Pharma Corporation here is using US dollar, right?
Yes.
Okay, so now I'm just going to explain how to deal with the foreign currency first. All right. First of all, now I'm going to do this inside your account. So now I am going to select the customer as ADP Pharma, and then I am going to sell some item. What am I selling? I am selling your dopamine, I guess. So your dopamine with the quantity of 1. All right. What is the due date? Okay, now location out must put. So what is the foreign currency when we make the sales invoice? This is the foreign currency. Now US dollar, maybe now your US dollar to peso is 58.02. So this is the domestic amount, right? So now what is going to happen if I save this? Of course, you must put this department code. If not, it's just going to go inside no department. So now let's put a department, aesthetics. All right. So now we are selling your dopamine. Okay. So now what happens if I save this? Of course, insufficient inventory. Okay, fine. So now Do you think it is going to be inside the receivables?
Nasi, I, wait,
The internet connection
Yeah,
is.
I created.
hello. We have,
Yes.
sorry Nazim,
Yep.
we have a problem on our
Yeah.
internet connection.
Okay. So can should I like uh, explain this again?
Start.
From the ADP Pharma, sorry,
Okay. All right.
we didn't hear any,
Okay.
sorry.
So let's start again. So now let's. I'm going to do this the lazy way. So I'm just gonna duplicate this. Okay. Now we have another one. Now I create another item. Take another item. Uh, all is dopamine. Okay, dubatamine, whatever that is. So now
WW.
you have the when you create the sales invoice to the customer, the US dollar is 58.02. So this is the amount in your Philippine peso, all right? So now, so now I put a department here. Now let's call this is the pharmaceutical department, and this is a sales invoice. So now if I were to save this, is it going to appear inside the receivables? I already created this tool. This tool is from ADP Pharma Corporation, but then it is not appearing inside receivable. Why? Because it is
Sorry.
not. Is that okay? Yeah.
Yes.
Okay. So you know why?
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 Because it is not a domestic amount.
Ah, okay.
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 Now you see it, right? All right. So now you see it. This is the USD receivable payment, all right? So when you issue out the invoice, the foreign currency exchange rate is different.
Mm.
And then when the customer pay, the foreign currency is different. So what do? You put here the foreign currency, the payment time when they actually pay. So now the foreign currency already increased. So I were to put here 59.01. So the balance, the difference is supposed to go where? How do you set it up? Whether the difference is supposed to go inside gain on foreign currency exchange or loss in foreign currency exchange. So how does the system know where does it go? Which account does it go? Right? So how do we tell the system which account does it need to go? It needs to go to this account. If you do not set this thing up, it does not know where to go. So you need to select the default one. Okay, so for gain and loss on foreign translation, and the loss of foreign exchange must go to loss on foreign exchange. Discount account should go to sales discount account. So set up already. So the customer pay you. Maybe the customer only pay you 200. Now this is the foreign currency that they pay you, right? So, and it's going to be dependent on this one. This is the current exchange rate. So now they pay you half first, whatever. So now we receive the money through bank. So do you see something here? You are paying them through, let's just pick the sample bank. Now this bank is going to be set up inside the bank just now lah that I show you. Alright, let's just pick the sample bank then, right? So this one is the bank charges when you receive money. If you receive money maybe through PayPal or something, you might get a bank charges for that. This is the date that you receive the money, and this one is going to be your discount account in foreign currency, and the payment in foreign currency is going to go here. So what is going to be your gain? You gain 198. This is in the domestic. This is what you gain from the foreign currency transaction throughout the invoice, and you receive payment. This is what you are gaining from the foreign currency. All right, and this transaction belongs to aesthetic department, and this transaction belongs to the pharmaceutical department. All right, now save this, and it has been paid. How you know it's already been paid? You can go to AR transaction details, and you can see this increase means in AR, this increase means you made a sales invoice, you invoice them, and then this decrease means you receive payment. Now whatever report you generate is going to be in your domestic amount only. Alright, of course you can create a template and put in the foreign currency and whatever it is. So that is how you deal with foreign currency. How do you know what the double entry is? You can go to print receipt journal in voucher. Every accounting transaction will come out in a voucher. Alright, so if I were to print this, you can see the double entry. Is this the correct accounting treatment? Yes, this is the correct accounting treatment. It takes into account your gain in foreign currency, this amount, for each of the transaction, just like that. Alright, that is dealing with foreign currency. Now let's create, any questions so far?
None so far.
Okay, is it the same with purchases? Yes, it's the same.
Okay.
So whether it's sales or purchase or something, is the same thing, but purchase goes to the payables and the sales go to receivables, whatever it is. Alright, so now just take this. Did you create this or I create this? Please purchase. Alright, so foreign currency, this is the rate. Oh yeah, I created this. Okay, 2.1. So now this is a purchase invoice, So now I'm going to save this, and it's supposed to come up in payables, right? But it is not there. Why?
Because the
Because you must
US.
select the US dollar first, alright? And then you can decrease the amount based on the currency that you select over here. This is the payment currency. When you actually pay, what is the currency? Exchange rate. So, as usual, click the sample bank and with the bank charges, and then you save this. Why cannot?
Account turning is not set.
Yes, the account for the payables is not set. Just now was receivables, now is payables. So you need to set up in both. So now, so loss in foreign exchange. This must be purchase discount. Alright. So now we can go and pay off our supplier. You see now we are making a loss in foreign exchange because the value of peso has dropped. What to do? So now you put the bank charges and everything. So this is going to be inside your loss on foreign exchange, which you can see that inside your voucher. You can go to print payment journal and you can see what is the double entry. How does it know this one is loss or gain? Because we already set up already. Of course, if it's a negative, you make a loss, it will go to loss. If you make a gain, it will make a gain. Alright, so now what about let's take the simple example first. What if your customer pay you in cash? What do? You give them the stock. Here you go. You have 3 boxes of dopamine. And then they pay you cash. What to do? So now we select, go to sales, of course, and select the customer.
Pag nagbayad daw ng
Okay, so location out, warehouse and everything, and then you select how much. So if the customer pay you in cash, what to do? It is not receivable, it is cash. You receive cash inside your bank. So what to do with that? There is a button called cash in. Yes, there must be some reason for this button, isn't it? So what to do?
Yes.
Okay, so what to do? So you click here, cash in. This one is you receive cash. Alright, so bank in, whether it's your petty cash or your metro bank or whatever it is, you must put in the bank lah. So now you select the bank. So you How much is this? 500. Alright. Select 500. Alright. So now you save. You receive money inside the bank. Save it. So now you can see that this is the journal entry. You debit checking accounts, which is your bank here, and you credit your receivables. Why credit receivables? Because we did not set this. You can set this to whatever that you want here. Alright. So do you think this is going to come up in receivables?
Yeah.
No, because when you already receive the cash, 100% cash, why should they pay you? You already received the money. So that is why. So you already credit out the accounts receivable already done. So this is how you do for 100%. 100% cash payment, just like that. You do not need to click this invoicing here because it has nothing to do with your receivables. So now, what if they pay you 50% before the shipment? Your shipment has not come yet. You have not sent them the goods, but then they pay you first. Now, what to do? Anyone there knows accounting?
Basic accounting
Okay,
only.
fine. So when you receive money for a goods that you have not sent out, what is the double entry? You receive money in your bank. Confirm it is debit bank. Whatever it is debit bank. What are you going to credit out? What account are you going to credit out? Because it has, when you receive money, you have a liability to ship out the goods because you are in obligation to ship out the goods, right? So you should record a liability account here because you have a liability to ship out the goods. So what do you do? So if you were to create a sales here, it is going to deduct your inventory if you were to key in something inside here. But then in reality you receive payment, but the shipment has not been done.
Yes.
Now, dilemma. So first thing first, you must record the liability. You must record that you receive the payment inside payment journal. Right? So now you must tell the system, I receive money. Receiving money is receipt journal, okay? So payment is you pay out money. Okay, now you receive money inside which bank? You must tell the system. Now you must credit out which account? You have a liability. So now what account should you credit? It should be a security deposit receipt. What is a security deposit receipt? this, if you can see inside our chart of accounts, if you put here deposit, is this asset account or liability account? This is a liability account, because you have a liability to ship out the goods. So now, which customer is it? It is, let's say, a Basker's book card. Okay, fine. So now you receive money. Let's say you receive 10,000. Okay, you receive 10,000. There's no bank charges. So remarks, receive deposit from customer. Alright, and then you must tell the system this transaction belong to which department. If not, it does not know. So let's just say this one is aesthetics. Alright, so now question, this bank charges account, if I put here 1 peso, let's say, which account does this go? Now we know where this thing is going to go. This thing is going to go here, security deposit account. But where is this account going to go? It's going to go inside wherever we tell it to go. Fee account. So if we want, we can select, now we can select our bank charges account, because there is a reason why we created this bank charges. Alright, so that is how you make a deposit. Now we have debited our bank and we have credited our deposit account. This deposit account is a liability. So when we ship out the goods, we no longer have this liability because we already ship out the goods, right? So how do we deduct that liability account when we ship out the goods? Okay, now we can go to sales because we are doing the shipment now. So now we go to sales, create new. Who is the customer? A Basker's card. Alright. Alright. So item, so gonna select this dopamine here. Alright. Let's just say it's 50,000, I guess. So now we need to record the accounting. Now this is where it gets interesting. We need to deduct this liability. Normally, if it's a straightforward transaction, it will go to sales. You need to credit out the sales merchandise and debit accounts receivables. So now you already receive this 50% deposit, let's say. Alright. So how do you record this? Whatever it is also, you need to record the sales, credit sales, and then you need to debit accounts receivables and debit out the security deposit. So how do you do that? You go to sales invoice 2. Now you can do this. So just now we inside our security deposit liability account, we have 10,000, we put that just now, right? So we need to take that out now. How do we take that out? That a liability is a credit balance account. So in order to take the amount out, to contra out, we need to debit that account, confirm. So debit deposit receive. So we take out that amount, debit out 10,000, and then we need to record the accounts receivables, right? Because there is another portion that we still need to record. They still need to pay us later, although they already paid this deposit. Still, they have some portion later that they need to pay. Accounts receivables. Now, let's say this one is 40,000 now. Now, credit which account? This is, of course, it is sales. All right. Now, that makes sense, right? So now if I were to save this, inside our receivables, will it be 40,000 or 50,000? It will be 40,000 because the deposit has already been received, the 10,000 just now, right? Yeah. So when we receive the payment, we need to deduct, decrease from the bank, same thing, sample bank, and save. All right. So whether it is 50% they pay first, or 25%, or it is 75%, 60 days later, 90 days later, or whatever it is, the payment method is different or whatever, in the end, it's the same. Payment is payment, stock moving is stock moving, that's it. All right? All right.
But
Yeah.
what my question with that payment terms,
Yeah.
we would like to monitor their balances.
The
Will
balances,
be
all right.
yes.
Where do you check their balances? Okay, there is two ways to do that. Receivable payment status. Okay, no. Receivable status. So now you can see that for this invoice number, the due date is this, and the amount that we bill them is this. They pay this much, and the balance is this. If they were to pay anything, all the transaction is going to come into here. AR transaction details. So now, if it's increase, means in AR transaction details, increase means you created an invoice for them. You created an invoice. So now, if it's decrease, means you receive money. So what about the deposit? Right?
Okay.
Okay. Just now we did not save that thing. Receipt journal. So sample bank, and then the security.
Yung pag naghingi tayong payment with the shipment, wala pa yung goods. Parang ayun. Dami explain.
Is it receive a basket?
Habak.
Okay. Is it going to appear inside here? No, it's not. Why? Because when we created the receipt journal, it did not go inside receivable because it's not receivable, right? So how do we check that? There is a function. If you go to accounting 1 reports here, there is all kinds of ledger here, 1, 2, 3, 4. So what is this all for, right? So just briefly go through. Now ledger 1 is the very basic one. You just put in your account code and it will tell you. Let's say accounts receivable. I were to search this and then there is nothing.
Pero di ba deposit yun? Bakit papasok mo sa receipt?
Alright, accounts receivable. So what if you were to select a ledger account to see the debit and credit and what the balance is for one particular customer? What do? You go to ledger 2. Okay. So here you can select the customer. Does it go to account receivable? No, it does not. Why? Because when you receive, it is not a receivable. It goes to security deposit receive. This is the proper accounting for this particular, yeah, for this particular customer. Okay, so the balance, whatever it is, you just need to select the customer. Let's say a basket.
Excited lang.
Okay, a basket, and search, and you see what the balance is. If you collect a deposit, it is not receivable because you already received, right, the money. So that is how you do it. So this is AR transaction details. So what about all this? Is where you go to see if there's an overdue payment or everything. All right, so the payment due date, the due date when you do this sales invoice here just now, this is the due date. So the amount that whatever that you put in inside here, it is going to be on that date according to the month here, right? So that is AR aging details.
Nazim,
Yep.
The security deposit of 10,000,
Yeah.
how can how can it reflect on the receivables upon completion of payment?
Upon completion
Because
of payment.
the 10,000 is the down payment
Hmm.
that we put on the security deposit received, and then the client already paid the 40,000.
Okay.
Okay.
Yeah.
So what happened to the 10,000?
Uh,
Does it how will it be 100% payment for that particular customer?
okay. Well, in accounting, when you receive money, it's supposed to debit bank, right? So
Yes.
you have another option for you to do. So case, in that case, then what you need to do is, okay, so like this, we can, when you do this,
Transfer security deposit dun sa receivables, diba? Dapat para mag 100% siya.
Mm.
okay, so now you do this invoicing.
Okay.
All right, this is going to be the journal entry.
Kasi hindi siya 100.
So instead of doing the payments now, okay, instead of doing the payment, you can do this. Whatever it is, you must debit the bank.
Okay.
Okay, not bank charges, but the bank. You must
We will
select,
transfer
yeah. So this
we will
is,
transfer
yeah,
you
okay. So whatever it is going to be bank, and then you are going to credit out.
the security deposit.
Yes, is the same thing, and then you are going to debit accounts receivables,
Okay.
and then you are going to credit the sales. It's the same thing. Sales merchandise. Okay, so now 10,000, 10,000. Okay,
Yung debit
all right.
credit na security.
So this is gonna be the journal entry.
Yung merong down payment. Hello?
Yeah.
Hello?
Yep.
Ay,
Hello. Can you
ay,
hear me?
sorry.
Okay.
Your
Okay. So now, is the inventory out? Okay, 40,000. Ah, hello.
hello,
Ah,
yes.
yes. So that 10,000
Yes.
not supposed to be in receivables because it's a liability, right? So what you can do
But
is,
okay.
yeah. So what you can do is, you can create this thing first. It's supposed to be a liability. It's supposed to be a liability, but if you want
Yeah.
to record it in the receivable because you want to like tell the customer that you already received this payment just now, so now you need to pay another 40,000, right? So
Yes.
so the journal entry. Okay, if that was the case, you need to make it very straightforward. I think it is also better.
Okay.
You just straight away invoice this
You invoice the 10,000? What?
50.
Sorry. Okay.
50.
But we already have the 40,000.
You already have the 10,000, right?
Uh, yeah. But another transaction for this item number 3.
Another transaction? Yes, yes. You can just decrease 10,000 first.
Ah, okay.
Yeah. So is the accounting going to take place? So it depends on you, when do you actually want to create this sales invoice here.
Okay. So you're trying to say that we can receive the 10,000 down payment and will not invoice it yet, and upon
Yes.
upon upon the delivery of the
Yes.
goods,
Yeah.
that's where we can. Okay, so we can total it for the 50,000 payment.
Yes.
I
If you want to see it in receivables. Hello? 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 Hello?
sa PLDT ata nag-globe na lang ako. Hello?
Hello?
Hi.
Okay,
Sorry.
you can hear me?
Yes.
Alright. Getting back to the AR transaction details. So you can receive the 10,000 first inside your cash. And then the balance will be remaining inside your receivables, 40,000. Okay. So if you just create as many receivables, you can just you can add that thing up, and it's going to appear inside your AR transaction details. All right. Now, what if you need to create receivables without invoice? Can or cannot, right?
Okay.
So you don't have invoice, but you have receivables from your customer. You are supposed to
Yes.
collect money, but then you
We
do
will
not
not
have the
issue.
invoice. Do not issue invoice yet, right?
Yes.
So this is another way to do this. We have a lot of ways to solve your payment terms here. So you will select whichever that fits you. So you go to new receivable. This is very straightforward.
Okay.
So you can click on, okay, let's, this one we select Ace Hardware Philippines, right? And then you are going to receive 20,000 from them this date. There's no invoice. So I save. Is it going to be inside receivable? Yes. There's no invoice also. But then I have a receivable. So you can create a 50,000. You can create a 50,000 receivable, and then before you even ship it out, before you even do the shipment, you already collect 10,000. Let's say 50-50. You have not shipped
Okay.
out the goods yet, but then you have not shipped out these goods to Ace Hardware Philippines, and then you have not given them invoice. You have done nothing. All you did was you created a receivable for 20,000, which you pay 10,000. You pay half first, and then you did not move the inventory at all. There is no inventory movement.
Just payment.
Yeah, just payment. So what is going to happen to this other 100,000 here, right? So now receivable. No, okay, so now sales.
Pero mako-combine pa rin kayo.
So now
Yeah.
create, you duplicate this. Okay, now let's do Ace Hardware now.
Mm.
Ace Hardware Philippine. We put this as 20,000. Okay, 20,000. Now all done. So do we, if there's already a receivable here,
Yes.
yeah, there is already a receivable here. We already collected 10,000 from the 20,000 here, right?
Yes.
So do we need to do this invoicing? No, do not need to do invoicing, because this invoicing is going to create a receivable. We already have receivable. Yeah. So you do not need to click this invoicing. You just need to save it after this. All right. Any questions?
None.
No.
But
Yeah.
the but the 10,000
Uh-huh.
receivable and then the 10,000 uh balance
Yeah.
will be combined.
What do you mean?
Will it ano ba?
You mean this one? Okay, this is hardware. You
Yeah.
created a 20,000 and another 10,000,
Yeah.
right? So
Okay.
if I were to decrease this another 10,000, where do you think it will go?
So,
it
magko-close na
will
siya.
it will go to the same place.
Okay.
All right. So if I were to refresh this, let's say I were to click Ace. Okay, Ace Hardware Philippines. We search this. Yes. So now you can see 20,000, 10,000, 10,000 gone. Now the balance is zero.
Alam mo yung balance na balik siya 10,000.
Okay.
Automatic. Magto-total yan. Oo nga. Kasi same customer. Dito siya magdadala. Kasi same customer.
All right. So this is the same tracking number here.
Ayun, same tracking number.
Yeah, this is invoice number. See? 00007, 0007. Whether I create it inside here or whether I create it inside the sales is the same.
Paano niya na-connect sa sales invoice?
Hindi niya nilagyan na sa invoice. Nilagyan niya
Pero
lang.
bakit na?
Alright.
Alam ko, nilagay lang niya sa 8. Dala.
Panoorin na lang natin. Okay.
Alright. So how do you know? You need to send them a statement of accounts, isn't it? Where do you go to send them a statement of accounts? We call that customer vendor book. One. Okay. So let's see.
Or vendor. Yung SOA.
Ah, okay.
Tawag niya. Customer vendor.
So do you see for ADP Pharma Corporation book here? We have sales. This is what we sell. We invoice them, and this is what we receive already. So from a particular date and everything, you can see here. So this is what the remaining that they need to pay us. This is statement of accounts, right? So so how do you know about the inventory side? All right. So you can see inventory receivables and accounting receivables. It should be the same.
Okay.
So you can make the difference. If you were to have 50% first, or you collect money first, or whatever it is, it's all going to be inside your. You can go to accounting one, reports, and this too is going to be what you are going to be normally be using, these two. So you have this inventory receivable and accounting receivable, and just now the simple one, which is the sales and receive. Same thing, is just that you can see the difference. Sales receipt, accounting, and inventory receipt. This is the customer vendor book. You can also use this, the same one, for your suppliers also, by clicking these payables. Maybe you buy and sell at the same people. Can also. You can also display only foreign currency. No problem. You can see the foreign currency. This is foreign currency. This is in your USD for each of the item. All right. So now, all right. Any questions?
None. None so far.
Okay. So now you are going to be regularly doing payments and receipt. This is what businesses do. You collect money, you receive money, you pay money.
Okay.
So you have all these things here: general journal, payment journal, receipt journal, and SA journal.
What is
What
messenger?
is all this? Must be for some reason. We have 4 journals here. When to choose, when do you use which function? Right? So now, if the transaction is cash transaction, cash in to the bank is receipt journal. You receive money inside the bank as cash. So payment journal is when you pay money from your bank or your petty cash or whatever by cash. So receipt journal and payment journal is cash book entry. Anything that has to do with cash. If you can see here, we have a bank account, and you, for payment, you have debit which account. Debit which account. So if you were to go to receipt journal, you still have the same thing, but it is now credit, not debit, credit, because credit is a sales one, is a receiving money. You must debit bank and credit a particular account. With payment journal, it is the money going to come out more, so it's going to credit out the bank and debit the whatever expense you do this. So now you have general journal. When do you use this? This has got nothing to do with cash, this general journal. For example, you buy land, and then 3 years from now your land has been increased in value. There is no cash, but your land increased in value. What to do? So you go to general journal for this, because it has nothing to do with cash. So this is going to be general journal. For example, depreciation. You buy something, and you buy a car, and then it decreased in value. There is no cash coming out of your bank. So how do? You must record general journal, depreciation account, right? It's nothing to do with cash, this general journal. So now, SA journal. Now let me show you. Now, what is SA journal? Right. So now, let's say I were to give advance. Advance to employees. Okay. I were to advance Joy. Okay. I am going to give Joy 10,000 advance to Joy. Okay. So now this is payment journal, because the money is coming out of my bank. So now I'm going to save this. And what is the double entry? The double entry is going to be, of course, credit out bank. So what is the debit? It's going to debit advances to employees, Joy. So Joy now goes to the shop and buy something with that 10,000, and then he come back to the company with some receipt. It is nothing to do with the company's account or company's bank, right? So now how are you going to deduct that? So now Joy goes to buy something from the shop for the company, okay? So now come back with receipt. How do you key in that receipt? Right? So this is why we have this SA journal. You need to put the employee code. Who is this employee? And then you need to debit whatever expense that is. All right. So now let's say Joy goes and buy a computer equipment, let's say. All right. So now and Joy goes and buy that in Ace Hardware, and then the computer costs 7,000, and then here buy computer.
Pero paano cash advance
Okay.
ko na?
So the company pay
Siya loan.
Yung sa sweldo
Yung loan na parang.
Ano yun, parang cash.
So what is the journal entry? The journal entry is going to be debit computer equipment and credit out these advances to employees, not bank. It's nothing to do with your bank. This SA journal. So
Ano nangyari sa
so
tita?
now the company give 10,000 to Joy, and then Joy go and buy the computer. 10,000 give Joy, and then Joy come back with a receipt of 7,000. So how much is Joy supposed to pay back the company? It
3,000.
has to be 3,000. So where do you go and see this 3,000? It will show in income statement. Fund statement. If you search here, you have your sample bank. This is your beginning balance and your increase and your decrease in bank, and then your ending. All right. This is going to be your accounts receivable. How much did they owe you? Everything. And then it is also going to be here. The company advanced to Joy for 10,000, and then decrease 7,000, and 3,000 Joy is supposed to go and pay back the company. Okay, so this is why we have that SA journal to do claims and all. All right. So what if the company don't pay Joy 10,000, and then Joy go and do buy the computer herself? Can or not? With her own money.
Babalik.
Iba na naman to eh.
Can that work? Now, if let's say I go to delete this payment journal here,
Okay.
what will be inside my fund statement? My fund statement will tell me that the company owe Joy 7,000.
3,000.
Yeah. So the 10,000 advance is gone now. So the company needs to pay back because Joy used her own money for this, buy a computer. I can click inside here and see buy computer.
Okay.
Right. So now the company need to pay back Joy. So what to do? In payment journal, I just go and pay back Joy, right? With my bank. It has to be advanced. to
That's
employees.
right.
Okay,
No, no.
so
Agree.
it works the same way. So now I put here 7,050 cents. Give a bit of extra to join. So now I save this, and what will be inside my fund statement will be a remaining of 50 cents, isn't it?
Yes.
Yeah, so see, so it's the same whether
But
the company yeah, go ahead.
sorry.
Yeah.
The first sample that you did
Mm.
was the cash advance. The company gave me 10,000,
Mm.
and then I have a 3,000. I have an expense that's 7,000, and I have to give back the 3,000 to the company.
Yeah.
What are we going to do to the 3,000? Are we going to same what you did in the SA
Oh,
journey?
so you need to give back the 3,000, isn't it?
Yes.
So what do you do with the 3,000? It is going to be in receipt. So let's say let's say you the company owe you this now, as of now, the
Fifth.
company the company owe you 50 cent. So now let's
Yes.
go and pay back this 50 cent. How do we do it? Is you owe the company 50 cent. So now let's go and pay back this 50 cent. You pay the company means the company is receiving cash, right? So how do we
Yes.
record? So we need to sample, okay, with the sample bank, and then same thing. So joy. So now we give back 50
Uh,
cent. Give back company. Now I save this. And now if I go back to the fund statement, it will be 0. So now Joy does not owe anything because buy computer 7,000 and then receive 7,050 cent, and then now pay back 50 cent. So the balance is 0.
Ayun na.
Okay.
Hello.
Okay.
Hello.
Hello. Yeah.
Hello.
Yeah. Hello. Can you hear me?
Our monitor
Oh.
stop.
Okay.
Wait.
Yes.
I have.
Internet connection na sa problem.
Okay.
We'll just have to wait for the screen to move.
Okay. Sure. Just let me know.
Okay. Ayan, it's okay now.
Okay. It's okay now. All right.
Yes.
So now, this is important. Beginning balance.
Yes, that's
Yeah.
our problem.
This is important now, right? Beginning balance. So now, you want to change the beginning balance in 2015.
Yes.
Yeah. How do you do that?
But sorry, we
Yeah.
can input muna the 2018 beginning balance, or do we have to put the 2015 beginning
Oh, you
balance?
have to put the 2015 because it's
Oh,
going to be related later. Yeah.
okay.
Yeah. So let's say you want to put 2015 here, right?
Okay.
Your financial year is 31st December, so your beginning
Yo.
month is January. Okay, so you're gonna put the beginning balance inside your balance sheet. So now you are gonna do it. Have you tried this? No, right? Because if you try this, it may not work. Why?
I have 2018 EDR.
Yes, correct. So you need to change this, the EDRP, because it has been blocked already. Whatever that is below this date cannot be changed. So if you want to change anything on 2015, you need to change the EDRP. So have you tried this?
Hello.
Yeah, hello.
Hello.
Okay. So,
We have problem in our internet.
oh, okay, sure. Now, before you change this EDRP, there's something that you need to do first. Because this ERP does not know when is your beginning month. You have not told the system yet. They just know what the EDRP is. That's it. They just say, okay, before this date we need to block. That's it. But then when is your beginning month, the ERP don't know. So
Okay.
for you, before you put in the beginning balance later, when you have your financial statement for 2014 or 15, so you need to set the beginning month over here. Balance
Okay.
standard month, you need to set it to January 2015, and then only the EDRP will change. See, it will change now.
Okay.
All right, so now let's just make this simple. 2018. So you need to put in the beginning balance. All right, as of this date, 1st January this year, what did you have? And 1st January this year, now let's just create example. So let's say you have 10,000, you have 10,000, and then we save. Now I'm gonna make the most simplest balance sheet ever. I'm just going to make you, the only thing you have is 3,000 in cash, and that's about it. So this is what this is what a company this is what a company that only has 3,000 cash looks like.
Okay.
Okay, so you go to reports, balance sheet. All right, since you already have all these data entries, cash and cash equivalents. All right, we did not set the dates. Okay, so let's say we go to January 2018. Still ain't got money. Oh, we did here 10. All right. Now if we refresh this, so this is what a company that only has 3,000 looks like.
Okay.
All right, total assets must be equal to liabilities plus equity. So this is where you input the beginning balance. But what about the department, right? So if there were to be a particular something, for example, checking accounts or something. Okay. You can input the department over here for each department. So it is going to be for aesthetics department
Okay.
only. Alright. So that is accounting. So now you want, now we shall go. Now, is there any questions before that?
Uh, None so far. Our questions is regarding the invoice.
Ah,
IINV, inventory.
okay. Okay, just go ahead with the invoice.
Okay. Uh, we have the free goods or the deal. If you buy 5 box or 5 vials of that product, you will receive one for free.
Oh, okay.
So how can we input it?
Oh, okay. So you gave one for free.
Yes, for every 5.
For every 5.
Yes.
Okay. For every 5 of what?
For every 5 products that you buy,
Ah,
you will receive one
for
just
free.
for yes, for free.
Oh.
And then there's a free syringe and NSS. I haven't included that
Hmm.
because it's only a free goods,
Okay.
not
Do
real.
you need to record that in the accounting, or you take into account as the sales, or what?
For inventory purposes only.
For inventory purposes only. All right.
Yes.
So how do you include that in the invoice?
Kailangan din natin siyang
Ah,
TR.
sa TR, ano yung TR?
Ay, delivery.
We also need to reflect that on the invoice and the delivery receipt.
Okay. Okay. Bundle. So buy 5
Yes.
and then receive 1 for free.
Yes. Yes.
Parang ganun yung
Is that okay?
Yes, okay.
Okay. So now just inventory only, nothing is going to happen inside your location.
ginagawa mo din.
So you can just reflect that in the invoice.
Di ko pero na-edit mo din.
Okay.
So just save this, insufficient inventory. Go to the sales list. You can print that out. And delivery receipt and everything is just going to come as like that. It's not going to tell you, maybe you want to put some remarks, right? Remarks column, say this one is free or something. So that's about it.
Okay.
If you were to give sample, then you need to use this internal use, because sample has nothing to do with the invoice, right?
Yes.
Yeah, so internal use is going to deduct the inventory.
Internal use.
Yeah, this internal use. Let's say you give sample to the customer, nothing to do with sales, just sample. Or maybe you use your strings on yourself somehow.
Okay.
Yeah, okay. Maybe, who knows? So, and then use your dopamine on yourself as sample. Then we save this and it's going to go. So this is internal use. It's still going to deduct the inventory. It's the same thing. Still going to deduct inventory. It's just that this one has got nothing to do with sales. That's about it. Right? So any other questions?
What is the difference between the invoicing sales
Yeah.
and the sales invoice?
Invoicing sales and sales invoice.
Yes,
You
is
mean
I think
you mean
the tab below the shipping.
okay. Shipping? Or here?
Yes,
Or
the
this one?
invoice.
Alright.
Yes.
Good question. So now let's say let's say you are going to ship out this thing here from two different locations. Let's say I duplicate this and I take this one from another warehouse, but then I bill to the same customer. Oh, sorry, this is not invoicing. Okay, whatever. Okay, I uncheck this, nothing inside here. So now I take this from this one from HNB Korea, and another one is from my other warehouse. So I have one from location 200 and another one from location 100. Okay. So now how do I do the invoicing for these two? This collective invoicing is basically you are
Okay.
combining the two sales slip to have one accounting entry. Alright.
Di mo naman tayo nagagano.
Yeah. So let's say my Ace Hardware here, this Philippines Ace Hardware, I need to click here and click here. So I need to combine these two because this one is from one location and this one is another location. So I need to combine these two. Can I combine another one? Can also. It's the same thing. It's still going to go to this sales invoice also. And when I save this, it's still going to come up in receivables. So sales invoice 1 is still going to come up in receivables like this as separated. So I combine the two invoices and make it into one invoice. So now how do I print it? Let's say this is my one. I would like to print sales slip now. Now let's say I search this. Now I need to combine these two. This is 2, right? So this is Hardware Philippines. I combine the two. I print it out. See, this is now combined together with different due date. Alright. Alright. Any other question?
Check. Ano po, dun din pero check. Ay, gusto niyo pa ano natin? Kasi puro cash tsaka ano yun na. Ah,
Yeah.
Nancy,
Yep.
can you demonstrate payments received through check?
Oh, okay.
Check payments
Check payment.
Payments from
All
client.
right.
from our client.
From the client. All right. When you receive check,
I think may PD.
Ah, kasi,
when you receive the check, you need to record the check. Now, you do not have to do this also if it does not matter. But if you actually want to monitor when did you receive, when did clear, then you need to do this. If you do bank reconciliation in your company?
Yes.
Yes, right? So you do need to know when the check is cleared and everything. So
Mm,
now, let's say check number
check is
GHI 001. Alright, this is the check number. Okay, so now, okay, let's not make this funny. So you just put 002. Okay, fine. You receive this check from your customer. Your customer is Agnes. And then this check is going inside which bank? And what is the amount for this check? Right. And then put some remarks, whatever you want. Now save. Now we go to the checks received list. We have this. You have not, you have just key in the check number only. That's the only thing that you did. Key in check number, that's all.
can we put bank name?
pwede po mag-add naman.
Mm-mm.
So when the check is clear, you need to use the check inside receivables, right? So let's say I were to create a sales. Let's say I were to create a sales